I just found an interesting clip of Cathie Wood from ARK Invest, in which she kind of hints that she's possibly also shifting some more funds to Asia and maybe China in particular. But beyond that, I think there are really some quite valuable lessons and insights about volatility, investing in tech stocks, and maybe what's to come with the China opportunity.
In the early days of ARK, we were up to a 25% exposure to Asia, for example. And as time went on and the saber rattling between China and the US evolved, we decided to scale that down and became much more US centric, partly because there were so many more opportunities evolving and the growth rates in the United States associated with these opportunities were very appealing and not priced in the marketplace appropriately. So we thought there was a lot of low-hanging fruit in the United States. Our performance last year proved out that leaning more towards the US and away from the rest of the world had been the right strategy. And as we were taking profits in some of the US-based stocks last year, we were starting to move into Asia because what had happened is a lot of capital had been flowing into the United States, recognizing the excitement in innovation, and less so to Asia in our kinds of strategies. So we were just being quite tactical around the opportunity sets we were seeing and the relative valuations, importantly.
So as you mentioned, during the US-China trade war, she kind of leaned her focus towards the US because she saw many opportunities, and it's interesting how she picks stocks, namely by looking where is growth in the future potentials of the 5 innovation platforms, and then also looking whether or not this is already priced in or not. And yeah, well, in 2020, she found quite some opportunities there in the US. And she was rightly so. I mean, the fund's returns, they speak for themselves. She was highly successful with her strategy. And now it's interesting to see that she's also considering taking profits in some of those initial investments and maybe aligning more towards Asia. And I personally think lots of that also in Chinese stocks, actually. So basically, Cathie seems to be looking for growth and also low valuations. And that's now interesting in the context of my previous video that I saw kind of a sell-off in Chinese stocks and my fundamental analysis that most of these stocks are actually now beaten down to quite low valuations, and still having those broader context that I think, well, we may see good growth rates in the future, particularly in China. So now I'm wondering whether or not ARK Invest, maybe Cathie Wood, sees the same opportunity in Chinese stocks given this current sell-off. So she outlined that she already has shifted maybe a little bit of the focus, but now it would be interesting to see whether or not fund managers are actually also seeing this kind of opportunities. For instance, yesterday I made a quick post with the Patreon community feature here, analyzing US versus Chinese stocks, and I picked an index called BKCN Mellon China ADR, which kind of tracks some Chinese ADRs that are listed in the US. So it's basically kind of a tech index for Chinese stocks. And I compared the performance to the US counterparts. So here you see the blue line is the performance of this Chinese stocks index. And that has been quite high up in February, during the February highs. So it was up 21%. And in comparison, to instance, for the green line, that's Nasdaq up 8.8%. And then we also have the S&P 500, which was up 6.57%. So during the recent highs, you can see that the Chinese stocks actually have outperformed the US counterparts here on this kind of index level. But what also has come true is the notion of my last video that actually Chinese stocks are selling off more than the US counterparts. So here, this is only the last month performance. And now the blue line, you can see that the Chinese index has sold off minus 10%, whereas Nasdaq, the green line here, is down minus almost 1%, and S&P 500 even more than 1%. during that period. So you can see clearly the drawdown for Chinese stocks has been much higher. I have rumored about that in the last video, why it's happening and that it is happening. I mentioned political risk, but also certainly Chinese stocks are just perceived much more risky than the US counterparts, mainly, for instance, due to transparency issues, compliance issues, and also, of course, a lack of understanding of the market and what's happening in China, and given what kind of opportunities are actually out there. So in essence, these Chinese tech stocks seem to be much more risky and volatile than the US stocks. And volatility is great in a bull market and if things are going higher, because then they overperform, they outperform, as we've seen, for instance, in February. But if we have drawdowns, then these drawdowns also are more steep, and that means in a bear market, volatility obviously is what you don't want to have. But you cannot separate volatility from yields. So if you want those, growing stocks, growth stocks, and then particularly Chinese stocks that maybe at some point can actually outperform other stocks, then you also need to be aware of that this is way more risky and way more volatile than other stocks around there. So this volatility is inherent, and you cannot have volatility on the upside if you cannot have volatility on the downside. That's just a fact. But let's think from a fund manager's perspective now that the Chinese stocks are beaten down much more, and just considering still this overall macroeconomics factors that China is a fast developing country. They didn't have so much struggle within this COVID crisis than we had in the West and so on. I think there is reason to believe that the growth rates coming from China should actually be at least what we see in the West, if not outpacing that, based on a better macroeconomic perspective. So from a fund manager perspective, such as Cathie Wood, I would actually consider looking into such of those Chinese opportunities. Certainly not each of those stocks out there is a legit target, but some of these variations, for instance, let's look at Baidu or even SEP and stocks like that, they have been beaten down so much. So this could also point to an opportunity from an investment perspective, and also to a earlier bottoming out of these kind of stocks in particular. And what we also should not forget is actually that part of the reason for the tech sell-off has been fear around inflation and what happens when we open up the economy back. And in my point of view, this is really not a fear which should be aligned to tech stocks in China, because, well, these are mainly having their domestic market in China. They oftentimes actually have unfair competitive advantages against Western stocks, because Chinese companies are just preferred in the Chinese market. That's a matter of fact. And China hasn't printed as much money, and those companies can certainly have those growth rates of future cash flows in RMB funds, which is hopefully, well, maybe also not declining as much in purchasing power than, for instance, the US dollar, if that fear turns out to be true. So in the end, lots of reasons actually to think of that there is some unfair discounting going on in the Chinese investment opportunities there. So from a fund manager's perspective, that is, looking at a global portfolio and shifting around funds, taking profits on one side, going to another side, and so on. This should clearly be on the agenda somehow, that there is possibly an opportunity on the horizon. So for me, it doesn't matter too much, because I'm mostly invested actually already in those Chinese stocks so far. I have shifted most of my investment already late 2020, going out from some more of the value stocks in US stocks and bringing it over to more of those tech opportunities. But still, I think the fundamental part here is to look at the core of the business and the valuations of these companies, and that's exactly what Cathie Wood is also doing in terms of looking where the growth, the future growth, is priced in or not. So let me know what you think about this clip by Cathie Wood, and whether or not you think she will possibly align more of her funds to also Chinese stocks and opportunities. And then hope you smash the like button, and then see you in the next video.